patience, be a long-term investor, be prepared financially and psychologically to live through a series of bull markets and bear markets, because in the long run, common stocks will pay off enormously.
So in all my presentations, I read some of his most famous quotes because it's a really good reminder of how he thought about the markets. The first is, bull markets are born on pessimism, grow on skepticism, mature on optimism, and die on euphoria. The time of maximum pessimism is the best time to buy, and the time of maximum optimism is the best time to sell. A major cause of higher prices is simply higher prices. But when the trend is reversed, lower prices lead to still lower prices.
To buy when others are despondently selling and to sell when others are avidly buying requires the greatest fortitude and pays the greatest reward.
An investor who has all the answers doesn't even understand the questions. People are always asking me where the outlook is good, but that's the wrong question. The right question is, where's the outlook most miserable?
We never know when it will change. Each day we buy that thing that is most depressed in price, and eventually most of them recover. But we never know. We have to hold things very patiently. Average holding period of 5 years in order to profit from buying things at the right time.
If you want to have better performance than the crowd, you must do things differently from the crowd.
The right time to buy shares in a common stock fund, or when most people are not doing it.
Hi, it's Lauren Templeton. It's a beautiful day in Tennessee, and I'm sitting here enjoying my new copy of Value Investing Simplified by Cayden Chang. It's a great book. I hope you pick up a copy and enjoy it yourself.
Hi, this is Cayden from VIA Value Investing Academy. Now, thanks for joining another evening of our deep dive series. And before that, I would again like to thank Ms. Laura Templeton, which is the founder of her own fund that has endorsed a copy of our Value Investing Simplified book. And what I'm going to do is I just want to make sure that all of you is able to hear my voice and my slide very clearly. And I'm going to share screen right now, and my slide is fully up right now. Okay, very good. So right now you should be able to see a slide where the URL or the web address is valueinvestingsimplifiedbook.com, and I'll just need my colleague to post the link in the chat. Now, if any one of you wanted to grab a free copy of this book, which is like a reference book for value investing, you just need to click on the link. Remember, there is no www in front and there is no HTTP in front. It's just valueinvestingsimplifiedbook.com. Yeah, very good. Yeah, .com. Of course, when you click on it, you auto redirect to a website that looks like the one that's shown on screen, and you just need to key in the relevant information and you will get a free copy. But just take note, the book is absolutely free. You just need to pay for the delivery charges, because otherwise it's going to pass the charge on me. Yep, so again, if you want to grab a copy of our latest book called Value Investing Simplified, where the foreword is written by Ms. Laura Templeton, please feel free to visit this, and please feel free to share this link with anyone else. Yep, okay, so let's get started. This is the very first thing that we want to give you, right? Now, so let's get started. In the video that you watched just now, Sir John Templeton, the late Sir John Templeton, unfortunately he's already passed away, he has talked about the best place to find things to invest is when everybody is running away. Now, so what does it mean, right? If you use the S&P 500 index as a reference, you may see that on the 4th of January 2022, it was at its most recent high. And then around June, 16th of June 2022, S&P 500 has dropped by about 23.5%. And technically, as long as S&P 500 dropped to a low of 20% or more, is considered as a bear market, which means that in June 2022, actually the bear market has arrived. And interestingly, share price, right, is unpredictable, it's highly irrational. So the share price has gone up and then subsequently has came down, right? Yeah, And then it has gone up again. So as of 5th of December 2022, it was at about 4,071 points. So what does it mean? It simply means that if I use this reference point over here, and then I point to this part over here, right? Currently, the market is still at a 15% decline. So right now, the stock market is still bearish, huh? And the interesting thing, right, about bear market, in which I repeated many times, is after every bear market is always accompanied by a bull market. So what does it mean? It simply means that bear market is low, right? Yeah, that means we already know that after this low, it will be followed by a high. And I'm going to share with you some historical fact. Now, again, I've shown this many times, so pardon me, right, if you follow our deep dive series. So you can see here, post-Korean War recession, or this one I can't even pronounce this, Kennedy slide, which means that for every single dip over here, it could possibly a bear market, and it's also a recession. Yep, so that's one. So you realize that every few years, there's always a recession or a bear market, and then so on. So that's one, right? The second thing is, after every bear market is always followed by a bull market. And the most interesting thing is when the bull market comes, it tends to be higher than the previous bull, which is why overall the stock market for S&P 500, not for randomly any stock, there's only one direction, which is up. So wouldn't it be nice if you invest in something that could go up perpetually, and that is S&P 500. And let's hear from Warren Buffett, the #1 investor all time. So what is his assumption, right? His assumption is there is no way you can bet against America and win. So in other words, you need to stand on the American side. Yeah, so that is the S&P 500. One direction, in the long run, is always bull. So for any form of investing, there are two key things we need to prepare. We want to make sure that we know what to do. Yeah, in which what I've shared with you, right, the S&P 500. We also need to know what not to do. Yeah, because if you do certain things that you're not supposed to do, right, you end up losing money. So let me just give you one example of a company. This company is called Palantir, right? Yeah, actually VIA has done analysis of this Palantir maybe, I think it should be about a year ago when the market was very bullish. That was in 2021. So we must understand that in any bullish market, every single one is a genius. So in other words, even if you're a company that's losing money, the share price tends to go up. Yeah, so we have to be very careful. And initially, I didn't want to talk about this company because I've talked about this company for many times. But it just happened that yesterday night, one of a friend of mine, right, she told me she listened to her friend, and then her friend during the bull market in 2021 recommended her, right, to buy this stock called Palantir. Yeah, so remember, our friend or friend's friend or whatever, right, can recommend anything. But ultimately, we are using our money. See, we are not using their money. Yeah. So when somebody recommend us, like for example, if somebody recommend, oh, you're supposed to marry this guy or this lady, but it doesn't mean that you have to listen and then marry this person, right? You still have to do your due diligence whether this person is it worth marrying or dating and so on. But the interesting thing is, if it's a human, you won't do it, right? But for a stock, you would do it. You listen to somebody else, yeah, which is quite strange, huh? Yeah. So for this Palantir during the genius period, right, the bull market, the share price was about $18. Yeah, so this friend of mine, she's still holding on to the stock because she didn't know what to do, right? So, of course, from this point, $18.80 until right now, $7.19, it has a decline of about 61.9%. Yeah, decline. That's the decline. So, in order for her, because she's still holding on to the stock, in order for her to break even, not to make money, right? To break even, the share price has to go up by 161%. Yep. So what's the learning lesson that we can see from this, that we can get from this screen, right? It's quite easy to lose money. You buy something lousy, right? As long as the share price falls, it may stay low for a very long time during bear market. And then you panic, you do not know what to do. So it's quite easy to lose money. But if you want to make 161%, it's very difficult. Yeah. So now the question is, of course, the question that she wanted me to help, right? Is she wanted to ask me what could she do? By the way, it's a very difficult question to answer because ultimately, if somebody do not understand what they're doing, they're putting themselves into this predicament. Yeah. So in this case, I just randomly shared with her some thoughts. Right. Now, #1, she could do her prayers. Do her prayers, right? Yeah, prayers. That means you hold on to this company and then pray that maybe the company's profit will go up by 161%, so that the share price will go up by 161%. Yeah, but remember this luck, right? Yeah, there's nothing much you can do, right? Yeah. Then the next one is you have to sell away the stock. That means you fully cut loss. Yeah. Then she was quite upset. She said, "Oh, then I'll lose money." Yeah. So I asked her, what is the portfolio, right, of this company, as compared to the entire portfolio. So I think it's about 50%. So in other words, she put 50% of her entire portfolio's money into this company. Yeah. But during our 4 days value investing program, I shared that per industry we better keep it as 10%. Especially we are very new to investing. Yeah, so I think she did all the things that she shouldn't do. Yeah, so right now it's quite hard to salvage. It's quite hard to salvage, right? Yeah. So if I look at the company's earnings per share, yeah, the question is, are there any evidence that the company may make money? I have no idea, because since the day when it went IPO, right, everything is negative. This dotted line over here is 0. Yeah, so it has been losing money. Yeah, so now the question is, next quarter will it make money? I have no idea. Next 5 years, will they make money? I have no idea. Yeah, so it's important for us to know what not to do, which is to put money into a business where the future is unpredictable. But if you did, I mean, it's really, I can only wish you all the best, and hopefully my friend will make the money back. Okay, that's the only thing I can do. Yeah, which is why today's session is quite important, because analysis of very hyped up companies are all found, right, at our website, which is www.youtube.com/value investing academy. Yeah. So it's important for us to know what not to do. Huh? But having said that, if you want to know what to do, I mean, if you want to follow someone, right, there are many people for you to make reference to. Like, for example, you can make reference to Warren Buffett, right? I mean, a TikToker, a YouTuber, and a Warren Buffett. I mean, why would you listen to the TikToker and not Warren Buffett? It doesn't make sense, right? So these are the people that if you really want to know what they do to make you feel assured, I think it would be good for us to make reference to people who has been there, done it. So Warren Buffett is one, Charlie Munger is one, Michael Burry, and all these people. And I think about 2 YouTube live ago, right, we did talk about some of the companies that these 5 super investors has purchased. Yeah, so that is the first session. And then subsequently, the most recent YouTube live, which is our deep dive, we talk about 6 of these super investors. Yeah, so if you look at the previous 5 and look at these 6, actually there are already 11 role models for you to look, pay attention to some of the stocks. So I think they have a greater credibility, right, on what they do. Yeah, and if you want to know more, again, you just need to make reference to our YouTube channel, which is www.youtube.com/value investing academy. Yeah, so this is our first session, right, where we talk about the first 5 super investors, and then here we talk about the next 6 super investors. Yeah, so sorry, actually it should be here, right? So 5 plus 6, so we have 11. So we're going to add on to what we have done previously by making reference to some of other super investors, so that you have better choice. These are more legit people, right? But before I carry on, I just need help. There are about 60 of people watching this. On this slide, you should be able to see a QR code. Yeah, please use your phone. Just scan the QR code. When a message pop out, just click subscribe. Yeah, subscribe. So when you click the button subscribe, it simply means that whenever we upload any information that are very useful, right, you will be the first to be notified. So I'm going to pause here for a couple of seconds so that you can help us click on this button and so on. Now, if you look at the number of subscribers, this screenshot was done like quite maybe about a year ago, right? So during that time, the number of subscribers that we have is about 2.8 thousand subscribers. Right now, I think we should have about 12.8 thousand. Yeah, so you may notice that from this point to this point, we have grown by about 6 times, which is 600%. Yeah, I think I would like to thank those people who click subscribe. Yeah, because the information that we share, as much as we can, we want to share something factual, rational. And by sharing this, we are also giving respect, right, to the audience, because we are treating the audience as smart people. Yeah, that's important, That's important. And we want the audience to be an intelligent investor. Investor, not an intelligent copier, right? Yeah, okay, So just scan this, a message pop out, just click on it, and then just click subscribe. Yeah, so let's jump into what we're going to talk about today. The topic is called Into the Portfolio of Value Investors. So in total today, we're going to talk about 5. So I'm going to cover 2, and then later on I'm going to hand over to Hillary, where Hillary is going to talk about the remaining 3. Yeah. So let's get started, right? Let's do some quick revision. In our previous a 2 deep dive series where we talk about super investors, we first have to understand what is this term called value investing. Now, if you look at these 2 words, and we try to interpret in a very simple English way, right? So it may appear as that value investing is simply investing in something of a certain value, certain valuable. Yeah. So what is something that's valuable, right? Yeah. If you go a bit deeper, it simply means that we are looking for a business that is good. So that's first criteria. Yeah. And we can buy at a cheap price, at a discount. So 2 criteria, value investing is equal to buying a good business at a cheap price. And I'm going to show you a diagram. What do you mean by a cheap price? Let's assume, this is just an illustration. Let's assume that Sheng Siong, let's say, right? Sheng Siong, right? It's a company, local company that everybody knows. So let's assume that Sheng Siong is a good business. Yeah, that meets a numerous criteria of value investing, right? So let's assume that's a good business. Assume that's a good business, right? So it's possible that we can still lose money by buying a good business at an expensive price. For example, if you buy here, right? Yeah, and then you sell here, right? Which is most people quite good at, huh? They always buy high, sell low, right? They are quite expert in this. They end up losing money, even if the company is a good business. So ideally, we want to buy low, but nobody can buy here. Yeah, we want to buy low, yeah, and then sell high. But what is low, right? So from the angle of value investing, buying lower is buying below the intrinsic value, which is how much each stock is worth. So any zone right over here is considered as undervalue or considered cheap. Yeah, so in other words, we want to buy a cheap business and then sell it when it's expensive. Yep, so that's the basic fundamental of, the entry point and then the exit point. But remember, right, even though this is a basic fundamental, different value investors, they may have a different school of thought with slight modification from this idea. But this is the very basic idea. So remember, we want to find a good business, determine the intrinsic value, which is how much a stock is worth, buy below it so that you buy something good at a discount, and then you sell above the intrinsic value. Yeah. So Peter posted something, right? I'm not very sure what that means. Yeah. So today we're going to talk about 5 investors. Yeah. The first one we're going to talk about is one of my favorite investors, which is called Seth Klarman, right? The second one is called Howard Marks. Then after that, from this point onwards, Hillary is going to come in to talk about Li Lu, Merrill Whitmer, right, and Jim Rogers. I mean, Jim Rogers should be someone they're very familiar because I think right now he's residing in Singapore. Yeah, but he's retired some time ago. Okay, so let's talk about Seth Klarman, right? Yeah. So remember, before I start, we're going to give some specific companies, and all these companies are not any variation or recommendation because what we're going to do tonight is we want you to be an intelligent investor. So our role is to solely illustrate the application of value investing, right? Which is what we're trying to do tonight, and various methods in the context of real-life companies. And of course, under no circumstances does any of the information provided in the case study represent a recommendation to buy or sell of any stocks. Yep. And remember, right, in no event shall VIA or me and Hillary be liable to any one of you for any damages of any kind arising out of the use of any content here. So remember, neither My Canadian Investment Private Limited or VIA nor me and Hillary are operated or affiliated with any broker, dealer, or licensed financial advisor. Okay, yeah, and this is the last sentence. Yeah, so let's appreciate the information that's being shared here because Hillary really has spent a lot of time preparing this. So let's talk about the first one because remember, total there are 5, right? So I'm going to cover 2. So let's talk about this guy called Seth Klarman. Actually, he's not a guy, he's a super investor. Yeah, so this is how he looks like. Yeah, so who is he? I mean, why is it worth our time to so-called model after him? So number one, I think he has been there, done that. His net worth is a billionaire, and he can make billions, right, by being a value investor as well as a hedge fund manager. And of course, he's the CEO and the portfolio manager of his own funds, which is called, I don't know how to pronounce this, Bob Post Group. Yeah, and he's also the author of this book called Margin of Safety. Yeah, margin of safety. Actually, to me, this margin of safety is a very simple concept, but it's quite interesting that he could turn a thick book out of something that's very simple. Yeah. So what is margin of safety? Yeah. Later I'll show you some diagram to illustrate. So just now, right now, just hang on there first. Yeah. So remember, he's also the 15th highest earning hedge fund manager in 2017. And let's talk about his investment strategy. So that's about him, Yeah. But I think what we want to learn is, okay, now we know who he is. So what are the things that he do, right, that make him become one of the top fund managers in the world? So his investing strategy is as described in this book. Yeah. And one of the key components is called margin of safety. So let me just describe this. Remember just now we talked about the intrinsic value of a company. So let's assume that we are able to find a good business. Yeah, and then we'll determine that the intrinsic value of a company, let's say, is $10. Yeah, so theoretically below 10 we buy. So in other words, let's say $9.50 we can buy, $9 we can buy, $8 we can buy. Yeah, but because calculating the intrinsic value of a company requires some assumption, and if the assumption is wrong, and we just buy below 10, actually it's quite dangerous. Yeah, so usually for value investors, we always put in a buffer in case we make a mistake on the assumption. And this buffer of error, right, is also known as the margin of safety. And usually people give a margin of safety of about 30%. But for Miss Laura Templeton, when I met her in 2018, she said she's very conservative. Her margin of safety is 50%. Wow, 50% is a lot. So there's a lot of things that like cannot buy, right? Yep. So let's say if the intrinsic value is $10, and then you minus, let's say, 30% margin of safety, a buffer error. So in other words, for Seth Klarman, his buying zone will be anything that is less or equals to $7. Yeah. So if it's wrong, he loses very little. But if it's right, he's going to make a lot of money. Yeah. So his strategy involves the inclusion of the buffer error or margin of safety. So that's one. Yep. So remember, that's the same as buying undervalued assets. And remember, if it's wrong, he loses a little. But if he makes, he's going to make a lot. But there's one part, right, that's not listed in the slide. Is for Seth Klarman, he's highly conservative in the sense that usually when the share price goes above intrinsic value, like for example, like Warren Buffett, his philosophy is as long as you buy a good business, you want to stay with the company forever. But for Seth Klarman, it's the moment he comes close, right, to the intrinsic value, he may decide to sell it away. Yeah, he will not wait for the price to go up. Yeah, so that's one thing that differentiates Seth Klarman from Warren Buffett. Warren Buffett will hold the stock forever. But for him, it's when it almost reaches the intrinsic value or sometimes touches it, he will sell away the stock. Yeah, because he wants to quickly take profit, right? Take profit. So that is his style. Now, so if you look at the funds that he managed, the biggest fund, right, has this ticker symbol called LBTYA. So the company's name is called Liberty Global PLC, yeah, which is a multinational telecom company. So that sticks up about 13%. Yeah, but today we're not going to talk about this because he owned this business for quite a long time already. Yeah, quite a long time. And this company, Liberty, right, is under communication services sector. But right now we're going to talk about something that he has purchased recently. Now, which is the third quarter, right? So if you look at the arrow, yeah, we want to like so-called follow him, right, to see what he's doing. So during the third quarter, he invested in this company called Lithium Motors, ticker symbol, right? Ticker means a short form, LAD, right? So this new buy, that means this is the very first time that he bought into this business. Now, taking note that the impact, right, to his existing portfolio is only 0.93%. It's not 93%. So in other words, he took a very small slice. Yeah, small slice. Yeah, so his lowest purchase price, because he buy over, he buy along the way, right? So his lowest purchase price is 214. His highest purchase price is 295, right? So the average purchase price is about 261. And let's assume that this is his intrinsic value. So if I draw an arrow, this is like 261. This is assumption, Yeah, if that's the case, then below 261 is a buy, right? Then above 261 is a sell. If we apply it and map it across to the concept of buying below the intrinsic value. Yeah. And the interesting thing is, as of, I think yesterday when I prepared a slide, the price change, right? That means this 261 average share price, and this is the current share price. So which means that the share price has declined from 261 to 2229 by 12%. Yeah. And you want to look at it from a comical way, which simply means that if let's say anyone buy this business at 229, you are like 12% smarter than Seth Klarman. Yeah, this is another way of looking at it. Yeah, so if you want, you can take a screenshot of this, right? You can take a screenshot of this. Yeah. Okay, Lithium Motors, Yeah, the reason why I say take a screenshot of this is because of this average purchase price. Yeah, you can assume that it's like his intrinsic value. Okay, got it, Yeah, so remember it's a new holding, it's a new holding. So let's move on, right? Let's move on. So let's talk about lithium motors. Lithium motors, right? So remember, a lithium motor is the largest US auto dealership, a car dealership. So in other words, they sell both new and used cars. Yeah, sell cars. Yeah, I'm not so familiar with cars, but they are largest US auto dealership, right? So remember, so other than buying, selling new and used cars, they also offer auto repairing. So it's like a cross service, maintenance, financing, insurance. So they like one-stop station. So they offer 41 brands of cars, and the physical location, which is their distribution, right, of their services and products, take place across 282 locations in US and in Canada. So they are only found in US and Canada, not in Singapore. So these are some of the solution that they provide, services they provide, which helps them to generate money. Yeah. So here is quite like vague, right? So let's look at the numbers quickly, right, and see whether does it make sense. So this is revenue. Revenue, that means if they provide a service, they collect money. Yeah, you can see there is uptrend. So from the angle of value investing, what constitutes a good business is we want a company to have predictable revenue. Yeah, predictable revenue. And so far it looks predictable, right? Quite nice. Yeah, but remember, revenue is a vanity. Yeah, you can have a company with very nice exponential growth in revenue, right? For example, like C Limited. But the profit could be the other way around. Yeah, so we want profit sanity. So when we look at both, so the vanity is nice. So let's look at this term called earnings per share. Now, earnings per share in simple term is when you buy one share of the company, how much profit does it generate? And of course, we would want the earnings per share to be positive, to be uptrend, and then sui goes up, right, consistently. And in this case, it looks like it, and it matches what value investing needed. Yeah, so positive, uptrend, consistent. Because when the earnings per share is consistent and predictable, the share price is predictable. But if you look at the line alone, sometimes it doesn't give you some other information. So you may notice that in my slide, I added 2 points, right? So earnings per share has a unit of a US dollar. So in other words, if you buy one share of the company makes $3.13. So you realize that the company started with this low number, and then over time, positive, and then grows, right? And then it grows to this. But when it goes to this, you may not know what exactly it means, right? Yeah, it simply means that every single year, in order for the business to grow from 3.16 to 36.41, every single year it has to grow at 31.5%. This is a lot. Yeah, imagine our annual increment is only 3.5, but the company's profit is growing at 31.5%, which is why I think it's important for anyone, right, who works in an organization to invest. Yeah, because there is no way our salary can grow at 31.5% every year. But if you invest in a good business, it's highly possible. Yeah. So in short, this is a fast growth company. Remember, I'm showing you the numbers because we want to decipher what is Seth Klarman thinking. Yeah, since Seth Klarman is not here, so we're trying to like decrypt, right? What is his secret? So far so good, right? So far so good. But remember, there are also other numbers we need to look at. So for example, we want to look at another ratio, right, called the debt to equity ratio. So what does it mean, right? What do I mean by debt to equity ratio? So if a debt to equity ratio, right, is let's say equals to 0.5. Now 0.5 is 0.5 divided by 1. That's why it's called 0.5. That means for every dollar of equity or the capital that they have invested in the business, they can only borrow up to a debt of 50 cents. Yeah, but imagine if the person put in $1 and then they borrow $10. Yeah, so that's quite dangerous. So you want it to be less than 0.5. So in this case, unfortunately, the debt is quite high, right? Yeah, we want it to be less than 0.5. So can you see this number over here? This number is actually 1.07. So what does it mean? It simply means that for every $1 of capital that they invested, the company is borrowing $1.07. So that's a lot. Yeah. So this part actually doesn't pass the value investing criteria. We want the debt to equity ratio to be less than 0.5. But sometimes investors, they may beat this rule, right? Say, I think that's fine. It's only one of the criteria. And if you really want to beat these rules, that is provided the company has really consistent cash flow. Yeah, consistent cash flow. So what do I mean? For example, let's say I work in a civil service. My rank is super scale. So maybe every month I draw, let's say $15,000. Yeah. And because I work in civil service, right, my salary is almost guaranteed as long as I don't screw up. then maybe I may consider buying a bungalow or whatever. I may take out a huge debt. Yeah, but if I work in the private sector, let's say in the tech industry, and then right now tech industry are retrenching, right? And then before the retrenchment, I go and buy one big house, assuming that everything is fine. I think that's quite dangerous. So you look at this company, the cash flow is still quite positive. But remember, a Seth Klarman probably has his own assumption. Yeah, so here, I'm trying to guess what he's thinking. Yeah, guess what he's thinking. So if any one of you want to buy a business with high debt, you must ensure that the cash flow is consistently uptrend. Otherwise, no money to pay off the interest that's incurred by the debt. So that's one. So let's assume that Seth Klarman finds that it's good. He has his own logic of saying that, hey, this is a good business, right? Then we want to buy below the intrinsic value, right? Yeah. So I'm going to use Morningstar's intrinsic value. But before I move on, I just want to let you know that I've never used other people's intrinsic value, whether is it Morningstar, Guru Focus, or some other subscription site. It's because you do not know the algorithm behind. So it's always good for us to know how to manually calculate what's the assumption that we plug in inside whatever calculator they're using. Yeah, but let's assume that somebody subscribed to Morningstar, and then Morningstar said that, the intrinsic value is 467. Now be very careful. Morningstar tend to be very optimistic, right? And right now the share price is 229. So 467 is on top, 229 is at the bottom. That means if you buy lithium motors, trusting Morningstar's intrinsic value, you're actually buying at a 51% discount. Okay, so if something happens, right, you lose a little, but you make you make this at least 51%, right? Because you're buying at a discount. Okay, so this is a very important concept. So this is for Seth Klarman. Remember, the company is called Lithium Motors. So company one. So remember, Seth Klarman's average purchase price or his intrinsic value is about 261. Okay, got it? Okay, so we are done with Seth Klarman. So today you got one company, Lithium Motors. Okay, Then the next one, I'm going to talk about one of my favorite investors. It's called Howard Marks. I met him, I think, way back in 2013 when I went to Nebraska University. Later I show you a photo. Yeah, he's a very humble guy, but he's a billionaire, right? He's a billionaire. So Howard Marks. Okay, so who is this Howard Marks? So all the value investors, they are all billionaires, and the company that's managing is called Oaktree. Interesting, Oaktree Capital Management. Yeah, so he's the author of 3 books. One of the most popular book is called The Most Important Thing Illuminated. Yeah, there should be one word, illuminated. Okay, the most important thing. Yeah, Howard Marks. Now, just to let you know that Howard Marks is, his book is very philosophical. So sometimes when you read his book, or you're like, I'm quite factual. I cannot stand things that are a bit too vague. Yeah, so he is very philosophical, like want to tell you, don't want to tell you, that kind, right? Yeah, so you must be able to tahan this if you want to read this book. Yeah, read this book. Yeah, so yeah, Buffett likes. Buffett reads his investment memo. So in other words, whenever something happens, he write a memo to his investors. So Buffett like to read. Yeah, so Buffett is like his follower. Yeah, so legit, right? Yeah, so just now Seth Klarman, he used this strategy called value investing. But if you pay attention to Howard Marks, instead of value investing, there is another word, deep, in front. So he uses deep value investing. So what's the difference between value investing and deep value investing? Yeah, so just to let you know that deep value investing tends to, how should I say, buy companies that people don't like, and people don't like because it's a bad business. Remember, value investing is supposed to buy a good business, but he intentionally find some businesses are very bad, not so popular, and curse and swear by the investment community. And the reason why he want to choose this because if people don't like, if the business is bad, the price tend to be much lower than those companies that is good and cheap. Yeah, so remember that's way. That is his way, right? And of course, since he's buying a bad business at a really cheap price, I think he better focus on risk management. Yeah, so remember, risk management is we want to protect, minimize the downside. Yeah, and how does he do it? He do it by, a diversification. And another investor that I like is called Walter Schloss. Walter Schloss is also a deep value investor. He buy companies that is, not really that fantastic. And any one time, if you talk to Walter Schloss, his entire portfolio may consist of 60, right, to 100 companies. 100 companies. But if you talk to Buffett, right, Buffett is quite different. His portfolio may be 20 companies and so on. So you can see there's a huge disparity. So Warren Buffett style is a value investor, but he put all eggs into the basket and watch like a hawk. So Walter Schloss is many baskets. Yeah, many baskets. Yeah, but both are still value investors, except that Howard Marks is a deep value investor and Warren Buffett is a value investor without the word deep. Yeah, so if he's a deep value investor, he still make quite good money, right? Because his annualized return is about 19%, yeah, versus S&P 500 of 10%, which is spectacular. So as of September 2022, this is his portfolio, and one of his largest holding is TRMD, which is a shipping company that transport refined oil products. Yep, and the sector, right, in total there are 11 sectors. The sector this company is in the energy. If you are very interested in the energy sector because the war is still ongoing, you may want to pay attention to this company and do your own research. But let's talk about the company that he just bought. Yeah, bought, right? This company has a ticker symbol of PAGS. And when I look at this term, I was trying very hard to see what is the correct pronunciation. So what I did was I went to the YouTube and then I typed in this to see whether does this company has a YouTube channel, and then are there some guys inside then pronounce this correctly. Yeah, just to let you know that it's a Brazilian company. Yeah, I'm not going to pronounce it correctly, but it's called Pacha Seguro. Yeah, I cannot speak with a Brazilian accent, but it's a Pach Seguro. Okay, Pach Seguro, right? So he bought it during the third quarter of this year. It's a new purchase because we want to see, you know, what are the things that you buy, right? Yeah, remember a very small segment because remember highly diversified, right? Yeah, highly diversified. Its lowest purchase price is about 10, highest is 16, average share price is about 13. And the share price right now is 9. So what does it mean? Again, right, make a joke out of it. If you buy the stock right now at 9, you are 26% smarter than Howard Marks. This is a joke, This is a joke, right? It's not for you to buy, right? And it's a new holding. Yeah. So let's talk about this Pach Seguro, right? So what kind of business? It has a very nice logo. Now, just take note, right? It is a financial services and digital payment company. Yeah, something like PayPal and Stripe. Yep, Stripe, right? And remember, it's located in Brazil. Now, you go to youtube.com, you just search this one, right? You'll see all the videos. Yeah, all the videos with Brazilian language. Yeah, I don't think I'm going to buy this because in the first place, I don't understand Brazilian. Yeah, Brazilian, Yeah, so what are the services that they provide, right? They provide payments platform, financial services, and then they also offer fintech solution to consumers, B2C, to entrepreneurs, B2B, as well as a micro merchant, yeah, SMEs as well. Yeah, so it's a financial service and digital payment company. So let's look at some of the numbers and see whether does it satisfy a good and a cheap business. So number one, well, not bad. Revenue goes up, really nice, matches what value investing wants. Yeah, but remember, revenue is vanity, right? So let's look at earnings per share. Our earnings per share also pretty nice. So a starting point is 0.08. So the company has grew its earnings per share from 0.08 from 2014 to 2021, right, which is 3.53. So what does it mean? It simply means that in order to grow from 0.08 to 3.53, every single year, it's like the annual increment, right, has to grow at 71%. Yeah, which is much higher than the lithium motors. Fantastic. So it's a fast growth business. Yeah, fast, legit. It's not legit, right? So let's look at the cash flow. Yeah, because sometimes earning goes up, the cash flow may not look so nice. So these are the cash flow. Now, bearing in mind that this 12.6 million is in Brazilian dollars. Yeah, Brazilian dollars. But let's put one point over here, and let's put another point over here. Yeah, so the company has grew, right, its cash flow from 12.26 million Brazilian dollars, right, to this 158. Yeah, so we are talking about a 12.9 times growth in cash flow that's going into the business. So that is a lot of money. Yeah. So let's assume that we have checked through all. It's a good business. Yeah, but of course you want to know whether is it cheap. So again, we use Morningstar as an illustration. The intrinsic value is $14.30. Anything below this is called undervalue. Anything above is called overvalue. So the current share price is 9.96, which means that let's say, like illustration, right? If let's say we buy here, we are buying actually at a 32% discount. And this discount, Seth Klarman called it the margin of safety. Yeah, margin of safety. Now, bearing in mind that Howard Marks' average purchase price is 13.35. Yeah, so you buy here, you're smarter than him. Okay, if you want, you can take a screenshot over here. But just to let you know, for the 90 of you, this YouTube live, right? The videos will auto be recorded in our YouTube channel. So don't worry, you can always come back another time. But remember, right? 10 years later, you come and revisit this. The fundamentals of the company may change. Yeah. So we need to always monitor, right? Yep. So this is me with Howard Marks. Now I'm showing you this photo just to boost my ego, right? Yeah. But you know, sometimes in life we do not know who we meet, and then we meet the bad people, like buying a bad stock. Then our life gets bad. Yeah. So you meet something good person, you know, life goes for the better. So in 2013, when I met Howard Marks, I have actually bought a copy of his book. I was very happy of his. I've been holding on this book for quite a while, right? So when I saw him, I asked him to sign. So then have this photo taken. So that's the context. And at the back, you'll be able to see like the name tag, right? Because the photo was taken within a lecture hall, in a university called Nebraska University. So this is the context. This is the context, right? Yep. And I think he's nice in the sense that after the photo was taken, I asked him a lot of questions. Yeah, and then he told me, this, his opinion is this. Yeah, but I also don't want to take up too much his time. I think it's about maybe 1 minute or 2 minutes. Yeah, but remember, right? I'm not asking questions, about a human being, right? This guy, he's a billionaire. So now the question is, how many chances we have in our life, right, to talk to a billionaire? You ask him a question, have a photo taken with him, and he's nice to answer the question. Yeah, so I think throughout just a few minutes, I really learned a lot, right? So of course that was in 2013, right? 2013. Right now it's 2022. So it has been a long 9 years. And of course throughout the 9 years, I also met a lot of people. I mean, Laura Templeton is one of them. And the reason why I want to show you this is because ultimately it's very important for us to know what to do and what not to do. Yeah, this is another professor that I met. He's a very famous professor, right? And he has written many editions of this book called The Essays of Warren Buffett. Yeah. And his name is called Professor Lawrence Cunningham. I can't remember which university, but he's a very famous professor, right? This one is somebody that's very popular, yeah, and he's really a legit guy, right? His name is called Professor Aswan Dabonaran, and he's from New York University. And if you look at this photo here, right, he's really nice. Yeah, after the class, I asked this Professor Damodaran, is it okay you spend like 10 minutes with me? Yeah, I want to interview you. Yeah, but the lame thing, right? The lame thing is actually I asked my staff to use a phone to record. Yeah, because actually we have a Sony camcorder, but we left in the office. Yeah, so I asked my staff to take a video and then record this. And all these things are published, right, in our YouTube channel that you're watching right now. Yeah, so I'm really glad. And of course, Professor Bruce Greenwald, I met him in Columbia Business School. Yeah, and this Professor George, right, that's on the right, yeah, who's a very good friend of Warren Buffett. I met him when I went to Ivy Business School to learn from him. Yeah, so these are the knowledge that I acquired over the past 21 years since the dot-com bubble burst in 2001. And I think moving forward, I just want to share some of this experience with you because I've been in the stock market for about 26 years. Yeah, and this photo illustrates our most recent graduating class of VI 61. 61 means 61 batches. And you can see that it's quite a number of people, right? Just to let you know that some of these people get doctors, lawyers, pilots, engineers. So all these are very intelligent people, yeah, in their own specific niche. But they want to learn more about investing, yeah, because investing is something that they do not know, but they're really intelligent, right? Yeah, yeah. And I think we are thankful that throughout the past 12 years, we have been attracting a lot of very intelligent people. Yeah, intelligent people. And this is another slide to show you some of the businesses that they have screened. Remember, Seth Klarman has his own way of screening. Howard Marks has his own way of screening. And these are some of the companies. I purposely hide. If I don't hide, you all go and try buy, right? I think it's quite dangerous. So over here is actually US company is hidden. At the bottom is actually Singapore company is hidden. All these companies are good businesses. And you realize that these are the intrinsic value where our graduates, yeah, which are considered of lawyers, doctors, and so on, right? They know how to calculate the intrinsic value. Yeah, using a calculator that we pass it to them, and they can do it in like, let's say 5 seconds. Then after that, if it's below, right, they know this is buy. If it's above, it's a hold. Yeah, hold. Yeah. So remember, it's important for us to know what to do, yeah, and know what not to do. Yeah. And the reason why I want to show you this is moving forward, right? Oh, Angeline is wow. Okay. Yeah. Angeline, you don't know I know so many people, right? Okay, so anyway, okay, let's focus on this. Anyway, moving forward, the reason why I want to show you some of the photos is because it's important for us to acquire knowledge from a good place. So this is a bit like self-boast. Yeah, so just to let you know that we are running to a on-site masterclass, which is highly complimentary. Yeah, and the first on-site masterclass is going to take place on the 7th of December, which is actually tomorrow. Yep. Then another one is on the 13th. So if 7th December come as a shock, so don't worry, right? You can register for the 13th, and I just need my colleague's help, right? Alex, to post the 2 links into the live chat. Yeah. So while he's posting, let me just share with you what are the things that you're going to learn, right? Yeah, out of me, because I learn for others, so I'm going to hand over to you, right? So you learn 3 main things. Is you will learn how to generate 3 sources of passive income. Yeah, even if you know nothing about investing. Yeah, and that includes, like I say, lawyers, doctors, pilots, engineers, and so on, right? And then, of course, you learn how to invest with minimal capital. And when I say minimal capital, it's Sing dollars, $100. Yeah, so that's the minimum. If you got more money, that would be great. Yeah, and the most interesting thing is I want to share with you one method that's used by Warren Buffett, which is a super investor, which is called a cash flow option strategy. Literally, in simple terms, is you can use your knowledge like a cash dispensing machine, right, to print cash either on a weekly basis or monthly basis for the rest of life, until to one point that you can completely replace your existing salary. Yeah, so this is what you're going to learn. Yeah, what you're going to learn, And to make sure that your time is worthwhile, after you learn the 3 hours, yeah, and before you go back home, yeah, we will give you a hard copy of our national bestseller, which is Investla. Right now it's retailed at $3, and because your time is so precious, like no money can buy, we're going to give you a prepaid, a Starbucks stored value, right, gift card, and inside has $10. So in total is $43. Yeah, and the reason why I want to give out all this is for branding purpose, so that you remember us. And we also highly encourage you to bring your friend, because if your friend comes, your friend will also receive the book and the Starbucks gift card. But because you bring your friend, right? Yeah, you can bring 1 or 2 lah. It's already quite good, right? Because you make the effort to bring your friends, you will also receive a $20 NTUC a voucher plus a $20 Golden Village movie ticket. Wow, that's quite a mouthful of things to say, right? Then of course there's nothing money can buy, right? It's really the knowledge. Yeah, knowledge. Okay, so what I'm going to do is my colleague has already posted 2 links. Yeah, I can see over here. If you cannot see the link, you just need to refresh it, right? Yeah, refresh it. So there's a 2 Eventbrite link. And in case some of you are not our graduates, like for example 92, I'm not very sure how many percent are not our graduates. You just need to click on these 2 links. You see, ultimately I think we want to, once you click on these 2 links, a separate page will pop out. If you're using a browser and a phone, of course, a separate page will pop up. It's just 30 seconds, your name, mobile phone, email address, and that's about it. Once you've done this, tomorrow, one of our colleagues will email you the location and so on. Yeah, but the location is Shenton Way. Shenton Way, Yeah, good, right? Yeah, so I'm going to leave this slide over here. So remember, the link is there. You just need to click on the link, fill in the relevant information. And as of this point, right, maybe I will buy you some time, maybe like 20 or 30 seconds, right, while my colleague switch the camera to Hillary, so that Hillary can continue the remaining 3 companies, and then she will hand it back to me. Yeah. So maybe 30 seconds. Is there a 30-second timer? Don't have. I don't have. It's okay. Don't have. It's okay, right? Yeah. Yeah. Okay, Yeah. So remember, the 30 seconds is for you to just click. Yeah. Register for complimentary masterclass. There's no catch. There's no catch, right? Yeah. And then at the end of the evening, if you find that you learn a lot, you collect the book, gift card, go back home. We're happy for you. Happy for you, Okay, very good. So I think I will let my colleague, right, to do some adjustment to the lighting, the camera, and so on. So while we are handling this, may take 10-20 seconds, right? Yeah. For non-grad, please fill up very, very, very fast. 10-20 seconds. Hillary will continue with the 3 companies. So just hang on. So right now we have done with Seth Klarman, which is Lithium Motors, and a Howard Marks, which is the Patch Seguro.
Hilary here. So I'll be carrying on forward from what Cayden has shared earlier. So I'll be sharing the other three value investors, which earlier on Cayden has shared about Seth Klarman and also Howard Marks. So right on, we'll cover about Li Lu, Merrill Whitmer, and also Jim Rogers. So for Li Lu, he's the only Chinese guy from the list of value investors that we have shared so far. So who is he? He's a Chinese-born American value investor, businessman, and also a philanthropist. So he's also the founder and chairman of this hedge fund, Himalaya Capital Management, which focuses mainly on the public companies within the Asian region. And he's actually the author of 2 books. So you can see from here, the books are in Chinese, but I put in the English translation, which says Civilization, Modernization, Value Investing, and also China. So he's actually a close friend of Charlie Munger. So Munger likes to describe him as the Chinese Warren Buffett. Somewhat impressive, right? Okay, so we'll see what are his investing strategies. So he likes to find very cheap stocks, which is undervalued securities. So how did he do that? So one of his investing mantra is that he likes to have accurate and also complete information, which brings us to this concept of the value investing known as circle of competence. So you can see on the photo on the other side, the circle there. So in order to have an accurate and complete information, he will only focus on, I really understand the business and industry, which is the dark blue area. Okay, so he identify and invest in long-term compounders businesses via these few methods. Economic mode that was shared in one of our YouTube live earlier under Charlie Munger, and also companies that have great growth potential, and also he looks for companies that has great management team. So these are his investing strategies. So now, why is he so amazing? And also Charlie Munger says that he's the next Warren Buffett. It's because he managed to achieve a compounded annual return of 30% since 1998. So right now, let's see what is his current portfolio. So we can see that his biggest position is actually Micron, which takes up about 33% of his whole portfolio. And his portfolio consists of 2 main sectors, which is the financial services and also technology. Okay, so right now we'll see what is his latest stock purchased. So we take note that actually he did not purchase anything in Q3. So I managed to find out that he purchased Google in Q2 of 2022, which is a new buy. And he purchased quite a lot, which is about 5.51% of his overall portfolio. And this is the lowest purchase price, his highest purchase price, and also the average purchase price of Google that he purchased. And currently, because of the bear market, most of the shares are now trending downwards, which means that if you buy now, like Cayden said, you are about 16% smarter than him, which is just a joke. So since the share price has went down, does this mean that Google is no longer a good company? We have to look at the financial numbers. But before that, let's have a look at some of the background of Google. So some people might realize that there's 2 types of Google shares. So here, add on that GOOGL is actually an A-class shares, which means that for the shareholders who bought this share, they have 1 voting right. But for people who purchase the C-class shares, which is GOOG, there's no voting right. Other than that, actually, there's not much difference of these 2 shares besides the voting rights. Okay, so Google is actually an American multinational technology company, and it's also the parent company of Google and other technological subsidiaries. So we can see that other than Google, Alphabet actually also invested in other technological related subsidiaries, such as infrastructure, healthcare, transportation, so on. Okay, so now let's look at the numbers. So we can see that Google is actually generating a predictable uptrend revenue, which is what we wanted to see based on value investing methodology. And for its earnings per share, earlier on, Cayden has shared that in order for the company to generate from 1.49 to 5.61 of earnings per share, they need to generate about 14.2% increment every year. So based on this, it seems like Google is still look like a good company. Okay, so next we will look at PE ratio. So what is a PE ratio? Actually, PE ratio is another financial metrics that people will have a quick glance to see that whether is the company an undervalue or an overvalue. So based on value investing methodology, we wanted to, in order for the company to be undervalued, we wanted to see that the PE ratio is less than 16. So, but currently for Google is at 26.93. Does this mean that Google is very expensive? We are not sure yet, but this is just a quick glance to say that maybe Google might be overvalued at this moment. But this is just a quick glance of it. Then we wanted to know how is the debt level. But the debt level for Google currently is 0.11, which is below 0.5 based on value investing methodology. So overall, when we see these financial numbers at a quick glance, it seems like Google seems like quite a good company, but further investigation is required. Okay, next, we will look at Meryl Witmer. Okay, so who is Meryl Witmer? She's the general partner at the Eagle Capital Partners, and she's also the member of a Barron's Roundtable. So what is a Barron's Roundtable? Barron's Roundtable is actually a group of investors that they gather together and they give stock picks at the early of every year. And she's actually served on Berkshire Hathaway, which is Warren Buffett's company. The Berkshire Hathaway board since 2013. Okay, so her investing strategies is that she likes to invest in companies that has a great cash flow. So what is a cash flow? So cash flow here actually means that when the cash flow is positive, there's money coming into the business. But if it's a negative, it means that the business is actually bleeding money. The cash is actually flowing out of the businesses. So this is what it means as a cash flow. And she also looks for a company that is significantly discounted, which is an undervalued companies. Because when you purchase a company that is undervalued, you have a lower risk. And she also looks for a company that has a great management team. Okay, so now we'll look at some of her past performances and her portfolio. So here is her historical performance in 2002 and also 2005. So for both of these years, she realized a 10.6% return compared to S&P 500 at the same year. And the latest one that I managed to find, which is in 2013, and you can see that these are a list of roundtable member, which is this Barron's roundtable member, and Meryl Witmer come up as the first, which she generated about 16.90% in 2013, compared to S&P 500, which is about 28.20%. However, when I further try to find out her latest portfolio, I did not manage to find it because her last updated portfolio information was in 2013. So let's see what I managed to find out. So in 2013, her last reported data is that her largest holding is actually Berkshire Hathaway B shares. So there's a difference between an A shares and a B shares. So the A shares is a much more expensive option, but the B shares is about $315 as of 1st of December. So to know more about Berkshire A shares, I actually shared during our last YouTube live on Tom Gaynor, where he actually purchased Berkshire A shares. So you can look at that YouTube live to find out more about Berkshire Hathaway A shares. Okay, so this is her portfolio based on S&P 500 sectors. So the largest sector is actually financial services, which is about 24.19%. So this is her overall portfolio in 2013. Since she only released her portfolio in 2013, she also did not release any of her new stock shares, right? But not, because she's around Barron's Roundtable, every year she'll give out some of the stock picks. So here I managed to find out one of the companies that she released. Okay, so this stock pick suggestion that she released is actually $3, and she actually gave 5 stocks, but I picked this one. It's because it managed to generate a total of return of 10.6% in June 2022. Okay, so this is an extreme discount stores in US and Canada, where they have $237 tree in Canada and $7,800 tree companies stores, and also 8,000 family dollar stores in US. So they actually operate under 2 brands. First one is the Dollar Tree, where the people will go there and look for cheap items such as seasonal goods, toys and craft, all these items. And Family Dollar is actually a neighborhood discount stores where they sell family essential goods, food, snacks, cleaning products as such. So this is what this company is about. So it's something like the $2 shop or the chip store shop. Okay, so the revenue for this company is also going in a predictable uptrend. And the earnings per share, we noticed that in 2019, there was a sharp drop. And further research is because they actually has a high expense during that year. So which explains the reason why there was a sharp drop in 2019. But if we were to look at the compound annual growth rate from 2012, where it's 1.55 to 2022 at 5.8, it generated about 14.1% every year increment. Okay, so for the PE ratio, the company is about 21.98. Based on value investing methodology, it seems like it's slightly upwards, which is a slightly overvalue. But this is just a quick glance to see whether is it undervalue or overvalue. Okay, so for the debt to equity ratio, currently is at 1.29. So it is also slightly higher compared to the value investing methodology, which is 0.5. Okay, because Meryl Whitmer, she likes to invest in company with strong cash flow. So we will look at two of the financial metrics for cash flow. So the first one is cash flow from operations. So in short, this means that this is the cash flow that is generated from their normal business activities. So when it's positive, it means that there's cash coming into the business. And when it's negative, the cash is actually flowing out of the business. So we can see that since 2012 until 2021, it's actually a positive uptrend. However, in 2022, there was a sharp drop. So when I look into their financial statement, I found that because they has actually increased their merchandise inventories, means that the company is buying more inventories. So that explains the reason why the cash flow have a sharp drop in 2022. So next, we will also look at their free cash flow. So the definition for free cash flow means operating cash flow minus capital expenditure. And here, capital expenditure means the expense that the company used to purchase assets that last more than 12 months. So it means that the company invests money into their assets. So say similar to operating cash flow, we can see that from 2012 until 2021, it was in an uptrend manner. But in 2022, there was a sharp drop. One of the reasons is because the operating cash flow has a drop, and also the company invested the capital expenditure as well, which explains why there was a sharp drop in the free cash flow. Okay, so next we will look at Jim Rogers. So Jim Rogers, as Cayden has mentioned, he's an American investor and also a financial commentator based in Singapore. So sometimes you will see news about Jim Rogers that giving some suggestions. And he's actually a creator of the Rogers International Commodities Index, known as RICI, where it tracks 38 commodity futures in agriculture, energy, and also metals. So he's also an author of 6 to 8 books. So we realized that most of the investors in this session, they all write books. Okay, so for him, he likes to buy low and sell high. So he buys things when he sees there's a serious panic, because when there's a serious panic, people will want to sell a lot of shares, which ends up the share price of the companies will drop very fast. And he invests in something that is ignored, cheap, struggling, or maybe something that is changing. But in order to do this, you need to have the knowledge to buy that, which is the circle of competence. Okay, so now we'll look at his performance. He's actually the partner of George Soros, and they co-founded the hedge fund known as Quantum Fund. So over the 10 years, you can see from this chart, since 2009 until 2019, they generated over about 4,200% of return, which is much more compared to the S&P. Okay, because he's already retired, so there's not much data about his own portfolio, but he did mention that he owned commodities. So what are commodities? So commodities includes energy, grains and oilseed, livestock and meats, metals, and I find this interesting that they call the food-related products known as soft. Maybe metals are hard. And also others such as lumber and dairy products. So these are some examples of commodities. So since he's investing in commodities, we as value investors how are we going to invest in commodities? So in August this year, he actually suggested that commodities is because he says that this is the only asset that he knows is currently still cheap. And he says that if you own things that go up in price when there's an inflation, you make money. This is one of his suggestions about investing in commodities. So how are we going to invest about commodities? So I decided to look up about commodity stock, and Yahoo Finance actually gave a suggestion about these 7 stocks, but this is just a suggestion, not a recommendation. So this is to show that if you wanted to purchase something related to commodities, which companies we can look for, and here are the list, which is ADM, BG, ALB, DVN, and also as go on. But we know the name, but what is it about? So for ADM, it's actually a multinational food processing and commodities trading company. And Bunge is agri-business and food company that specializes in wheat. ALB is a specialty chemicals, so you can see on the far right, they actually provide lithium, which is an important ingredient for batteries for electric vehicles. And Devon is an oil and gas exploration company. LNG is actually a liquefied natural gas company, which is also related to energy. And this WPM is a precious metal streaming company. So a streaming company is actually a company that provides upfront capital financing for mining companies, because mining is an expensive exploration. And for DNN, it's actually a uranium exploration, development, and also a production company. So these are some of the examples of commodity stocks. And maybe you can type in Google and look for other commodity stocks, but this is just an example. Okay, so all in all, some of the common traits that we can learn from this session of value investors is that they buy when the share price is undervalued or at a discount. And one of the strategies that they use is margin of safety. And they like to invest in good quality business that they understand, which is the circle of competence. And this is because they view stock as an ownership of a business. So they will perform their own diligence before they invest. And most of them, they invest long-term for compounding effect and not for short-term speculation. So with that, this ends my session, and I will pass back to Cayden, and I hope you have enjoyed today's session. Thank you, everyone.
Hi, ladies and gentlemen, welcome back. So thanks to Hillary, who has done a very great job in presenting the 3 super investors and the company that they are interested and they have invested. So let's look back at the slide over here, right? So I'm just going to give some credit to the founder of value investing, which is this Professor Benjamin Graham. They unfortunately already passed away, as well as David Dodd. Yeah, so they started teaching value investing in Columbia Business School in 1920s, which means that value investing has been around for the past 102 years old. Yeah, so okay, huh? And Warren Buffett was once their student, and of course they learned value investing from them. And of course, when value investing first started, the philosophy is just one word, which is to buy cheap stocks, cigar butt stock. But over time, value investing has evolved with many branches, right? Some people give in various names, such as growth investing, deep value investing, yeah, or value investing, you know. But the background, right, behind value investing, the philosophy changes, because last time was just cheap, right? Right now we want to buy something good and cheap. Yeah, so you can see here, criteria number 2, it must be good quality, it must be cheap. So that is the fundamental equation of the value investing today. But there are some people who are still buying stocks based on the original Benjamin Graham and David Dodd's method. It's already getting, how should I say, fewer and fewer, but I do know some people who are still doing this. Yeah, for me, I still prefer to buy a good business at a cheap price. And there's one point, right, that Hillary has pointed out, and sometimes it's neglected by people, is because in the early days when I was in my 20s, I do this thing called day trade. Day trade, that means you buy and then go out a bit and then you sell and then buy and then sell. Actually it's like guessing. You're guessing. Right now I look back, that's the reason I deserve it. That's the reason I lost money when the dot-com bubble burst. But before that, the market was bullish. Then I thought I was a genius. But you know, so I've learned a lot. So I think since the beginning of my time, right, when I was much younger until today, I've been through like 4 rounds of economic recession, 6 bear market. So 4 plus 6. It has really taught me a lot to be really humble. So that's number one. We always want to see stocks as a business. We don't want to buy and then hope that the share price go up. This is as good as gambling. Yeah. So I think I'm grateful to some of these super investors. They are genius in their own rights. And previously, the very first session when we talk about the stocks or companies that's owned by these people, these are the 5 super investors. I mean, I wish them good health. Warren Buffett is already 90 plus. I hope that he lives forever, right? Yeah, so that I can pay attention to what he invests. Yeah, and of course, the second session, we also talk about these 6 super value investors. And Monish Prabhai started his investing journey by modeling after Warren Buffett. But over time, he developed his own style. Yeah, developed his own style. And today, of course, I talk about Seth Klarman, Howard Marks, and then Hillary has talked about the other 3 super value investors. So these are really great people. Yep, so I wish them good health. Yep. So but for us, we are not like them. Yeah, we are not like them. So if you are watching this video, I'm not very sure, some may be our grads, you will know what I'm talking about. Some of you may not be our grads, but whether our grads, non-grads, that's not the key, right? The key is for any investors, you will always face the same set of challenges. For example, right, do you know where to search for opportunities? And then for the past 3 sessions, we have given the answer to this question. One way to search for opportunities is to pay attention to the super investors and what are they doing. So that's one way. But there are many other ways. Yeah, but this is the one question that we have to ask, where to find, right? Yeah. Remember, not TikTok, YouTube, influencer, have to be very careful. Then the next one is assuming that you listen to Warren Buffett or whatever. He said something, Howard Marks said something. Yeah, we still have to be an intelligent investor to be able to differentiate what is a good and bad one. Yeah, because you can follow what he buys, when he buys, but by the time he sells, it's already too late, the share price drop. Yeah, so I think we better sleep nicely by understanding what is a good and bad business. And of course, you must know where's the entry point, exit point. Just now I shared with you the concept, intrinsic value. Yeah, below is a buying zone, above is the selling zone. But do you know how to calculate the intrinsic value? So that's another question, right? Then another one is no matter how good we are, it's impossible. Even the super investors do not know all the companies in all the 11 sectors in S&P 500. It's impossible. Yeah, we can only be good at something. So these are some of the challenges that we face. And the reason why I put out this photo, right, is way back in April 2020 when our Prime Minister Lee called for a lockdown. I got nothing to do at home, right? So I was thinking it was a recession, a short one. It was a bear market, but it's the best time to buy, right? So John Templeton, right in the very beginning, in the video said that the best time to buy when other people are desperately selling. So what I did was I pulled together a team of superheroes, inverted commas, who are graduates and who have been investing with us for a long while, right? So I designate them, I give them like something to do, right? Okay, this one, can you please take care of this sector? This one, can you please take care of this sector? So together we put together about 10 plus of our graduates who have been investing with us for maybe from 6-7 years to about 10 years, right? So that we start digging for companies that are good and undervalued, that satisfy the value investing criteria. And we have really smart people such as Dr. Betty Fan, right? I mean, doctor as a PhD holder, right? Yeah. So and then we have Dennis. Yeah, Dennis. So all these people, like Alice is a very senior accountant. So all these people are very good in what they do. Yeah. But again, each of us have our own superpower, right? So we pull together, yeah, and then we overcome all these things, yeah, all these challenges, and we follow a framework that is being taught by VIA, right? Where we go out to the universe and search for good companies, yeah, using screener, using various ways, and then we evaluate so that eventually you find good business, and then we will calculate the intrinsic value, right? So that if the share price is below the intrinsic value, then it becomes a very good purchase. And of course, ultimately, we cannot put all eggs in one basket. Yeah, let's assume that we are humble, I think we better have some form of asset allocation, right? Yeah, so what we did was we spent 2.5 years. That means since April 2020, and we collected, we gathered quite a number of companies. And let me share with you what I said, right? But the interesting thing is right now it's still the bear market. It's the best time to buy a good business at a cheap price. Now, we have a database and we store it in a certain portal, like a magical portal. Yeah. Just now we talked about US case study, right? So I'm going to do a switch and I'm going to talk about Singapore companies. And the reason why I want to spend some time talking about Singapore companies is because Singapore companies are a bit neglected. So that's one. Yeah. And the second thing is most people that I came across and when they started investing in the local companies first. Then slowly, maybe influenced by someone, then they start to explore US company. So since we have covered 5 super investors with 5 US companies, I'm going to like switch gear, right? Let me just focus on something, companies that are neglected. And the reason why I say neglected, because right now many Singapore companies are still undervalued, knowing that when a bull run comes, the share price will go up, right? So let me just share with you, if you have our portal URL, the username, you log in, right? Yeah, let me share with you what you're going to see, because later on some of you will have a chance to see what we have in our database. So for example, right, we have this database, database, right, where if you click on this, it's all one click. If you click on this, we have one whole list of good and undervalued Singapore companies, such as this one, UG Healthcare. Yeah, so in other words, if you click on this, you will be able to watch, you'll be directed to a video, about maybe 40 minutes with a detailed analysis of what this company is all about. Just now we go over very brief, right? It spent about 5 minutes, 10 minutes. But this one is an 80-minute analysis. Yeah. So you will have immediate access to all these good undervalued companies tonight. Yeah. But if you decide to click on other buttons, for example, this is undervalued companies, right? Yeah, this button over here is quite special. It's because every 4 months we meet with this group of people. Just now the barons, what do you call it? What's the group called? The lady has their own group, right? Yeah, Baron Round Table. So in other words, this SG Gathering and Bonus is like a VIA round table where we meet online. Yeah, so it's a special exclusive group. And when we meet online, what do we do? What do we do, right? For example, when we meet online, it's like our own VIA round table. We meet only 3 times. Yeah, the lady meet once per year, correct? Once per year, right? Yeah, but we meet more often. She only meet 1 time, but we meet 3 times. Okay. Yeah, so when we meet, what do you do, right? So number one, when we meet, we'll invite 2 of the authors and they will share, right? They'll present in detail about 40 or 50 minutes, about the company. Yeah, about the company. All the details, intrinsic value, everything is all done for you, 2 companies. And then after that, you have a chance to ask questions because the author who did the analysis, they're very familiar with the company, so you got a chance to ask them, right? And then not only that, you can have a chance to have a Q&A with me and Liu Feng. Now, if you're non-grad, you may not know who is Liu Feng. Anyway, Liu Feng is one of our instructor. He's a full-time value investor, and for his entire portfolio is only consisting of Singapore stocks. And he's the only person that I know in my universe, right, that likes to read annual report as a hobby. Yeah, so he's really good. He graduated from the #1 university in China, which is Peking University, came to Singapore, right, and then finished his CFA, finished his ACCA, right. But the most important thing is right now he really make multi-millions just by investing in Singapore companies. Yeah, as a value investor. Yeah, full time. Yeah. So our next round table, right, or our mentoring session is going to take place on the March 2023, which is just right after Chinese New Year. Now, if you want to be part of this round table, this VIA round table, so that you receive exclusive mentoring 3 times per year, later I'll share with you what you can do, right? So this is one attractive thing. And in case if you are not our graduate, you can click on this button over here, the bridging course. Then you'll be brought when you click on this, right, you will see a drop-down menu. And each of this is actually a module, right, for you to learn more about value investing. Yeah. For example, one thing about value investing is called economic mode. You want to buy a good business with an economic mode. But of course, that's not the end, right? The ultimate thing is this button. This button is really the most exclusive button that you ever click in your entire life. So once you click on this, you will be able to download, right, a PDF file, showing you all the Singapore companies that we have found, right, for the past 2.5 years. In total, how many companies do we have? Yeah, by the way, it's 2.5 years of our blood and sweat, right? Yeah, so out of this 2020, right, we found 25 companies that is good and cheap. Now, just to let you know that in the entire SGX, there are only about 780 companies. Yeah, be very careful. Most of the companies are lousy companies. Yeah, so out of 780, can you imagine? We spent 2.5 years, we only found 25. So that's how exclusive, how much effort that we put in just to squeeze 25 companies out of these 780. And the best part is out of these 25, right, 21 are still undervalued today, which is demarcated by all these yellow highlighted cell. Yeah, remember that there's still the intrinsic value. Can you see the intrinsic value? Yeah, amazing, huh? Amazing, right? And the best part is you can get instant access this evening. Yeah, that includes our VIA roundtable. Yeah, so that is based on what we have. But that's not all. No. Moving forward, we will still go to the Singapore SGX universe. Yeah, our team of people will do all the work for you so they can stand on the shoulders of all of us. So we will continue to find companies, one company per month, very exclusive. Yeah, we don't want to chin-chai anyhow find company, right? So that the next 1 year moving forward, you are going to have 12 Singapore companies. So everything is done value investing style, which has been proven across the past 102 years old. And our analysis, right, in the video form is segregated into circle of competence. That means we explain what the company is all about in detail. Yeah, we put in the numbers, but we explain the numbers so that it's easy for anyone who has zero financial background, right? We also throw in the intrinsic value. Yeah, so just to let you know that it takes our graduate maybe a couple of days to sort this out. Yeah, but for you it's just one click. Yeah, one click, huh? Yeah, so that will potentially help you to generate a value, right, of maybe 5,000 Sing dollars. And then of course, like I say, our own, I think there's an arrow over here, it should be 3, every 4 months, correct, so it's 3 times. So our own round table, right, yep, where we share 2 companies, we provide updates, new intrinsic value, Q&A with myself and Liu Feng, because we, all our money are in investments. Yep. So you are hanging out. The person hang out is very important, right? You hang out with the full-time investors. Yeah, so that's number 2. Yeah. Number 3 is in case you're very busy, doctors, lawyers, you work very busy, right? We also have a 1-page summary. So when you click on it, all the graph is over there, the description is over there. Yeah, so that you can download into a PC, you can read it. It's maybe a 10-second read. Yeah. Yeah, so for those people with time, you do this. For those with no time, you do this. So we cater for people with different demographics. So these are the value that we can generate for you. Yeah, which is $1,000, $2,000. So total is $8,000 worth of value. But of course, just now we talked about the database of 25 companies, right? Yeah, which simply means that these 25, then plus the additional 12 over here. So total, you're going to have 37 companies. Yeah, exclusive companies that we have found for the past 2.5 years. So what does it mean? It simply means that if you figure it yourself, you may spend at least 2.5 years trying to figure out. Yeah, but tonight you have all the returns, all the companies that we have found for the past 2.5 years. Yeah, so 37 companies. Now, so imagine, right, the amount of value, because value investing, imagine the amount of value that you're going to get out of all this. Because the team of us, me and the authors are doing all this for you. Yeah, for the past 2.5 years. And for the upcoming 1 year, we're going to do it for you. So total is 3.5 years of effort. Yeah, 3.5 years. Now, can you imagine 3.5 years of salary? How much is it worth? Yeah, it's going to be worth tens of thousands of dollars, right? Yeah, tens of thousands of dollars. That's why I put more than 13,000. This is the value, right? The potential return that you're going to get. Yeah. So if you want to be part of this VIA Singapore, right, roundtable, yeah, which is our Singapore companies, the original yearly subscription, right, is actually 888. But of course, we take into account GST is going to increase. Right now, we are still endemic. Inflation is going to be very high. So we are going to give a special discount only for tonight. Yeah, if you decide to join our Singapore companies roundtable, right, we're going to give a 35% discount just for today, which is $576 for the entire year. Yeah. Of service that we provide for you, plus the past 2.5 years of effort that we already put in. So what does it mean, right? So since we have 37 companies, so I put 25 plus 12, I take this divided by this, right? It's probably 1.5 movie ticket of Wakanda. Yeah, but after you watch the movie, you get nothing, right? You feel shocked, right? yeah, for maybe half an hour, one night, and then that's about it. But if you invest in a company in the future, movie tickets that you're going to have, it's going to be absolutely free. Yeah. So remember, one company which takes us a couple of days, yeah, it only costs anyone a 1.5 movie ticket. Yeah, that is the kind of value that we are providing. So I'll just need my colleague Alex to just post the link inside the chat, right? Yeah, inside the chat. So what's going to happen is one link is going to pop out. Yeah, if you have any question, Alex, maybe you can put your email address, right? Yeah, so this is my last few slides, and I want to give you an opportunity, right, to just click on this link. Once you click on this link, you'll reach a page that looks something like this, which is our VIA roundtable, right? So you just need to fill in your name, email address, phone number, just fill in what is required. And of course, I think there's some part where you're supposed to fill in the credit card details, right? Once you have done this, once you submit, right? Once you submit, I think for the next maybe 20 seconds, right, our system will auto-generate a username and password, which will end up in your email account. Whatever email account Yahoo one, you end up in your Yahoo email account. So in case in the next maybe 1 minute you didn't receive anything after submitting this form, just check your spam box. Yeah, because sometimes it may end up in your spam box. And the system that we use is Katra, right? Yeah, so the system Katra will auto send out this. So the moment you see this, don't go and delete. Yeah, this is auto-generated by our platform. And then once you click, you will see the username and password, and you can immediately log in. Yeah, if you have any question, you can always email to alex@mykinesis.com, which is already in the chat. So right now, registration is open for those people who want to access all the Singapore companies that we have. And I'm going to put this page over here, right? Yeah, put this page over here. So remember, the annual 1 whole year, plus 2.5 years of our work, it's only 576. Yeah, I mean 576. Currently, you really cannot do much. I mean, if you look at the GST voucher, whatever voucher the government give you, it's only a few $100. Yeah, so instead of taking a few $100 and then you go and buy stuff, right? Yeah, much as well you take the amount, you go and invest. Yeah, so like I say, one company which can potentially generate thousands of dollars. Yeah, right now it's at the discount, right? With a huge margin of safety at the $15, right, per company. Yeah, so I'm going to leave this thing over here. So maybe I will need my colleague to just put a 10 minutes time. Yeah, 10 minutes time. But you keep the screen over here, 10 minutes time, right? So right now I'm going to leave my screen over here so that you can see the things that we can help. Yeah. So 10 minutes time. Then after 10 minutes, then our so-called discount will be over. Right? Yeah, discount will be over. So remember, yeah, tonight you have access to these 25 companies. Yeah. And then out of 25, right, 21 are still undervalued. Yeah. And in case some of you are our US case study subscription, by the way, there's a further discount, right? Yeah, further discount. Yeah, but don't worry. Today, you just need to fill up the information, you just submit. At the back end, right, my colleague Alex will do some matching and see those people who subscribe, how many of you are our US case study subscribers. Yeah, then we'll give you further discount in addition to what we're giving today. Yeah, because you are our customer on both sides. We want to make sure that you have the greatest value. Yeah. So remember, 25 companies is immediate access today. Moving forward, right, we're going to find one company per month, so that on average there will be 12 companies per year, and then we're going to see each other, right? Yeah, 3 times per year. So this is our roundtable meeting. Yeah, where we get a chance to talk face to face via Zoom, right? Yeah, via Zoom. Yeah, so this is most precious. And remember, right now is the bear market, and we all know that after every bear will be a bull market, which also means that if you didn't take the opportunity to buy a good business when the price is low, right? Yeah, you will never get a chance to sell when the price is high. Yeah, and the best time is now. Bear market is always the best time for any super investors to invest. Yeah, so right now we have maybe about 8 minutes more, right? Yeah, 8 minutes more. Yeah, so 8 minutes is for you to click on the link. Yeah, in case you have any question, please feel free to type in the chat. It's okay. I can see the question and I can answer. Yeah, but if there's something confidential, cannot log in, that kind of thing, right? Alex is over there. Alex is with us in the office. You just need to email alex@mykinesis.com. Yeah. So, so I'm done over here. So remember, Yeah, the discount is 35%, huh? And then if you are our US case study subscribers, you have a further discount. I can't remember what was the number, but there's a further discount. Maybe Alex, I will need your help. For those people who are our US case study subscriber, is it okay you just do me a favor to type in the chat, right? What's the amount? Because I've forgotten already, right? Yeah, you just type amount in the chat so they know, oh, I'm US case subscribers. But you still click on the same link. Yeah, you still fill the information. Yeah, what we'll do is we'll refund you lah. Yeah, refund you, right? So that you have that special discount. Okay, special discount, right? Okay, good. For the 75 people who are watching this, are there anything that you want to ask? Yeah, so just click on it, fill out the information, and then we will see you in our next roundtable meeting. 460. Oh my goodness. Yeah, so 576 to 460. My goodness, that is I think I better write 460 here. Wow. So that is an additional like $116 discount. So in others, it should be maybe a further 50% discount. Wow. So it's this half price, huh? So this half price, right? Negative 50%. Yeah, so in case some of you are already our US case study subscribers, this is a good deal. But you just fill out the information first. Tomorrow when Alex come to work, he will figure out the refund so that eventually it'll be 460. Yeah. 460 for 1 whole year plus the 2.5 years. Wow, I mean right now 460, 1 year, what can you do, right? Yeah, so the best is you make use of this 460, which is a 1 year, 1 whole year of fee, right, to make money. For you. Yeah. So there are 71 people who are still watching this. If you have any question, please feel free to type any questions in the chat. Okay, huh? Yeah, by the way, just to let you know that Liu Feng, who is a full-time investor, right? He's really a genius, he's really smart. And then every time when we have our roundtable meeting, right? He always share his thoughts. Yeah, so for example, we just had our roundtable meeting just, I think, about a week plus ago. Yeah, we talked about 2 companies. One is an oil and gas company. The other one is a furniture company. Out of these 2, to me, I like the furniture company better. Very easier to understand. And the interesting thing is the furniture company is a fast growth company. Ooh. So what I mean by fast growth, that means over time, such as maybe 4 or 5 years, we will expect the company to maybe grow minimum maybe 40 to 50. If it's 4 to 5 years, we expect the company to double its share price. Yeah, double its share price. And just one company is worth more than 460. So in other words, out of the database of 25 companies plus the 12 companies, 37 companies, just one, right? Yeah, you'll get maybe 2 or 3 times your money back. Yeah, money back, huh? Yeah. So Alex has already posted a link. So Angeline, thanks, right, for always, be with us, always being with us. Right? Okay. So anybody has any other company? What am I saying? Anybody has any other question? We have about 5 minutes plus left, right, before we go off. Yeah. Okay. Yeah. So maybe I can show you the site. Yeah, because my colleague has already posted the link, right? So I'm going to just stop share. I'm going to go to my browser right over here. Yeah. So all of you should be able to see our YouTube channel, right? So let me just show you the page. We actually have a shortcut, right? The shortcut is bit.ly. Yeah, bit.ly / can you see? VIASG case study. Later I'll write this down because our URL is very long, right? Yeah, very long. Yeah, so it's actually VIA. So you can see, right? VIA and then SG Singapore, right? And then case study. Yeah. So of course the link is over there. So if I click on this, yeah, you reach a page. Yeah, like what you see right on the screen over here. So like I say, you just need to fill in the full name, email address, phone, street address is your residential address. It's quite simple. This one is just Singapore, right? Singapore, your postal code, your credit card. Yeah, here, just take note, here select this one, please, right? Because this is monthly, yeah, monthly, right? Yeah, so yearly is much cheaper, because if it's monthly, every single month deduct 58. Yeah, but if it's yearly, right, if I divide by 12, it's only 48. So please click on this. And then once you've done this, you just click subscribe. Yep, you reach a thank you page and so on. And then at the same time, the system will email the username and password and check your spam. Check your spam, right? Yep, so there's also one part. Remember, after you see whatever company, after 7 days, if you're not happy, we will just refund you. Yeah, full refund, right? Yeah, you're not satisfied, we refund you the amount within 7 days. Yeah, no question asked. Yeah, and then of course, all these are secure processing, right? Yeah, and all these are promises over here. Okay, yeah. So very good. You can see here 27 hours, right? Yeah, so in ours, this offer is only valid for 1 day, right? 27 hours. So once this one is up, remember it will auto revert to a higher fee. Yeah, higher fee. Yeah. So let me just go back to the offer again. Yeah. So I'm going to share my screen to the slide again, and we have about maybe 4 minutes left. Yeah. So remember, these are the value that you're going to get, value investing, right? Yeah. For 1 year, in future 1 year, and past 2.5 years of the effort that we put in. Now is the best time to invest. Yeah, and we're going to give you discount, and if you are our US case study, there's further discount. So there are tons of discount. And remember, your investment is merely 1.5 movie ticket per company. Yeah, movie is a shook for 1 night, right? 1 day, right? But investment, you could generate many times. Okay, let me see. Yep, so remember, just fill out information, and I shall see you soon. Yeah, for those people you are filling up, just click fill out information. If any question, you can post your question in the chat. And for the rest, if you have nothing much on your way out, right? Don't mind, can you just help us do a thumbs up, right, for our video, because Hillary really spent a lot of time doing all the work. Yeah, when you're watching, you may feel like like quite simple, but it's actually a lot of work. Yeah, a lot of work. So before you go off, it just take like a split second of your time, right? Just click on the thumbs up. Yeah, click on thumbs up. Yeah, click on thumbs up. Any other question you want to ask? Yep, there's still about 60 plus of you. Yeah, we have about maybe a minute, slightly past a minute. Yeah. Okay. So the web address, right, is quite easy. Let me write this down. Is bit. Then there's a full stop, right, and then Lee, right. It's a shortcut. Shortcut a bit this. Then oblique, right, oblique. Then VIASG, right, case study, singular. So this will be the URL. In case you leave this site, you forget. But I think our YouTube channel, the description, right, we can put in this one. Yeah. So that when they click, they can still see. Yeah. Jerry, thanks. Jerry, you sound familiar, right? You should be our grad now, if I remember correctly. Yeah, or our subscriber, right? Yeah, because it's always the same few people who are supporting us. Right? Hey, for those people, before you go off, you don't mind, can you help us click on the thumbs up, right, before you go off? Yeah, thumbs up, don't mind, right? Just give us some encouragement. Right? Yeah, we have 13 thumbs up. Yeah, every thumbs up, like, power up, right? Jerry, thanks, and Fui, right? Yeah, Fui, thanks a lot. Yep, there's still about 55 of you. I think thumbs up already. Time's up. Okay, so Jerry's our grad. Okay. Any other thing? Maybe just a minute more. Any other thing? Oh, Jerry, thanks. Thanks. The next YouTube live will be quite interesting. We will be talking about financial sites. Yeah, right now we are trying to demonstrate that we can search for good companies by paying attention to what the super value investors do. Yeah, another way of searching for a good company is you pay attention to those financial sites. But remember, financial sites, you have to be very careful. those people who so-called give the stock analysis that they may not be investors themselves. Yeah, out of these two, I prefer to look at what super investors are doing. Yeah, but we just want to demonstrate there are many ways of doing things. So looking at financial side, trusted one, right, are just one of the many ways. Yeah. Then once we have found those sites, we will list out some of their recommendation. Yeah, their recommendation, right? And then of course on our side we have to assess whether is it a good or bad one. Yeah, so that we demonstrate, right, how we can find a good business and buy it at a cheap price. Okay, good. Yeah. Still got 55. Yeah. Anything else before we knock off for the day? Yeah. Today I think it's Tuesday, right? I almost thought that today is Thursday. Yeah. Any other things? Okay. If not, I just show you one last slide so that we have a positive, uplifting ending, right? So remember, the value that we provide out of this case study is more than $13,000, of course, over time. And then if you decide to be part of our VIA SG, right, roundtable, there's going to be a 35% discount. You will see me every 3-4 months, and that will be 576 for 1 year, and then plus the 2 years effort that we've done. So it's 3.5 years, and 576, you're going to get 10 times back, right? Yeah, in the next 1 year, and it's only worth the price of a 1.5 movie ticket. Okay, So once you click on the link in which Alex has shared, just fill in all the relevant information. Yeah, and Lily, thanks a lot. It's interesting, Lily? I'm not very sure. Are you attending our session for the very first time? Yeah. Just take note. My name is Cayden Chang. I'm the founder of VIA. Yeah, and our mission, right, is we care to make you a better investor. But before we end, just to let you know that there is only one VIA, because right now there are many companies who like to mimic our company's name, right? They call it VI something, but there's only one VIA, Value Investing Academy. So is me, Hillary, who are here to serve you. We also have Irfan and Susie, who are doing all the back-end work for the video. And we have Alex, who is right somewhere in the office, supporting you with your registration. Yeah. So with that, ladies and gentlemen, I think thank you all. So Lily, I hope to see you soon in our next YouTube live. Yeah, my colleague, I will continue to send, if you are in our mailing list, we will continue to send you email. Yeah. So with that, thanks a lot. So click on the link, fill out information, and I shall see you soon in our round table meeting. With that, so goodbye.